Welcome back to our intermediate financial accounting class. Over the last couple of segments, we've talked about liabilities, current liabilities specifically, and how we can break them down into determinable and contingent liabilities. Those that we know, both the amount and the timing, and contingencies, those that we're not sure about the amount, or we're not sure about the timing, or we're not sure about both of those two elements. We then, after we talked about those definitions, started talking about determinable liabilities and providing some examples, both with short-term notes and with revenue payables, sales taxes and unearned revenue. And then we finally started talking about one of the biggest types of determinable liabilities, and that is our payroll payables. Now, payroll payables are not necessarily the biggest in terms of size. Accounts payable and income tax payable can be much bigger, but they're big in terms of the time required to take care of them. There's a lot involved with the computation, as we saw last time, just of two of the four elements of payroll payables. We went through and talked through all of the different withholdings and how we calculate FICA, and withhold federal taxes and state taxes, etc. And then we calculated the payroll expenses, which are our unemployment taxes for federal, unemployment taxes for state, and then matching FICA. There's a lot there, both in terms of calculations and the money the company's on the hook for. So there's a lot involved with payroll. Now, one thing I should mention about payroll, one of the reasons we take so much time on it in this class is because of its importance, not only in terms of accounting time, but in terms of labor relations. A friend of mine worked as a union president. I believe I've mentioned him earlier. And he used to love talking to the HR people in negotiations because they focus their efforts on the wage per hour. And my friend would focus his attention not as much on the wages per hour, but on the benefits. Health insurance benefits, vacation days, bonuses that they might give, etc. So he would concede in these negotiations on the wage rate and get concessions on some of these other elements. And it turns out that by conceding 25 cents in a wage per hour, he could get 50, 60, 70 $1 worth per hour in these other concessions. So understanding this whole picture can give you quite an advantage, no matter which side of the table you're on. Let's jump back in then to our example. Again, we've already done the normal payroll elements for this company, the ones that happen every time. The payroll and its withholdings, so the taxes and the other amounts that the employee pays, we pay them, and then they take out what they have to pay. And then we did the payroll taxes, what we pay as a company for the right to have that employee. Now it's time to turn our attention to the last two elements, the two optional elements, and they are the vacation days and other compensated absences, so sick leave, paid holidays, and then bonuses. And you can see for our example, Dr. Jones actually does a pretty good job with his employees. He pays them for 2 weeks of paid vacation, 1 week of sick leave, and then 3 paid holidays each year. So he actually gives them quite a bit of time off. In addition, Joshua and Emily get a bonus. It's not a flat rate, it's a percentage of the company's profits. And so we'll need to figure out how much that is as well. Let's go ahead and start with compensated absences, and then we'll do the bonuses next. Let's start with our vacation. And the easiest way to figure this out is actually to start not with each employee, but with the total. So we calculated that the total hourly wage for all 3 employees was $120. Let's go back and take a look at our table. I'll show you where we get this from. So right down here, $120, that's the amount it cost Dr. Jones to have all 3 employees in his office at one time. And I know since all employees get the same amount of paid leave, I could just use that one total. If there's different amounts per employee, like if the secretary got just a week and the senior nurse got 3 weeks and the junior nurse got a week and a half, then we'd have to break it down. But in this case, it's all the same, so I can calculate it for everybody at one time. So each employee works 40 hours per week, so this is our weekly hours. And the time off is 2 weeks. So if I multiply the 120 times the 40 times the 2 weeks, I get $9,600 that Dr. Jones is paying for these employees to have time off. Now we're going to record this, not all in one big lump sum, but as they earn it. So each month, as they work, they're essentially earning part of this $9,600 because they have to work for the whole year to get this time. So what we're going to do, each of the pay periods, is record 1/12 of that. If he paid every 2 weeks, and we divide by 26. If he paid every week, we divide by 52. But we're dividing it by the way they're earning it, a little bit with each paycheck. So $9,600 divided by 12 is $800, and we're going to record that as vacation leave payable. Next, let's look at sick leave. And sick leave, he offers them 1 week. So we can set this up again. It's still 120 hours at 40 hours a week for 1 week. So if I multiply that out, I get $4,800. And I divide by 12, because again, we're going to break this out over each of the different payroll periods. So $400. And if you look at these two numbers, you can probably see there's a shortcut here. Since this was 2 weeks and this one was 1 week, I could really just divide by 2 and it would have worked out just fine. But it was more fun to do the full calculation. So let's see, this is sick leave payable. All right, the last are the holidays. And these are a little bit different because this is not a week, these are days. So it's still $120 an hour, but now we're going to multiply by the number of hours per day, which would be 8, times the number of days, which would be 3. 3 paid holidays. So 120 times 8 times 3 gives us 2880. And again, we'll divide by 12 for a total of $240 per month. So this will be holiday leave payable. So I've got all these payables. Now I need an expense. And I call this wages expense. It's part of paying these employees. So 800 plus 400 plus 200. Paid leave or compensated leave earned. Now, when they go on vacation, instead of recording more wages expense, we record some of this vacation time payable or vacation leave payable. So if we go back to our original journal entry, what we do is, let's say they took some time off, so I would figure out how much of those days were vacation. Let's say it was $1,000 worth, and I would reduce this to $18,200. Although this part would stay the same. The difference is, since I've already recorded the cost of giving them vacation pay, I take that out of a payable instead of recording it as wages expense. So wages expense is only going to be the days they work, and the vacation leave payable will be this extra time that they earned that now they're taking off. And you could do the same thing if they took sick leave. You do the same thing on those holidays like Christmas Day off and 4th of July off and whatever the other one is that he pays them for. The last of the payroll payables that we have to worry about is this bonus and what we need to do with our bonus amount. And that takes a little bit of work sometimes. If it's a flat rate, it's really very simple. If I just say, you know what, everybody gets a $100 bonus, really easy. If it's a percentage like this one, then it takes a bit more of a calculation. So let's take a look at what it would be if it was a flat rate first, and then we'll come back and get this 5% of the clinic's profit. So the numbers to jot down before we move on are the 5%, that's the bonus rate, the $250,000 of our income before taxes, and 30%, that's our tax rate. So we'll need those in a second. All right, so if it's a flat rate bonus, then it's really straightforward. So let's say we give each of our employees $100 instead of the 5%. So it's really only going to cost Dr. Jones $200. So I'm going to debit bonus or wages expense for $200. And then I go through all of my normal payroll. So I'd have federal taxes payable and state taxes payable and so on until I got down to the actual cash, and they'd get some small amount of this, maybe 130 out of the 200, because I've taken out all these other deductions. $100 bonus paid to each nurse. And since it's a form of wages, depending on the state, we'd end up having payroll expenses for this as well, and we'd figure out FICA, and we'd figure out the unemployment taxes, etc. Pretty straightforward, the same process that we've done before, getting the numbers really easy. Where it gets to be more challenging is when there's a percentage, and that's what happened here. We offered a 5% bonus on net income or profit. That seems pretty easy, except for the fact that bonuses are a sort of wage, and wages are tax deductible. So I need to take the bonus expense out of my income before taxes to get the tax rate so that I can get to net income. But I want to give the bonus on net income, which means that I have to have the tax amount so that I can get to net income so I can figure out how much the bonus is. So I can't figure out the bonus without the taxes or the taxes without the bonus. I got a problem. The good news is that this is a series of equations, or a system of equations, with two unknowns. If I've got two equations and two unknowns, I can solve. It's basic algebra. Let's go through this so you can see how it works out. My bonus, we'll call that B, is equal to the bonus percentage times earnings before taxes, or income from continuing operations before taxes, minus the taxes. The taxes, we'll call that T, are equal to the tax rate times earning before taxes minus the bonus. So again, as long as I know the tax rate and the bonus rate, I can solve this. So let's put the numbers in. The bonus is equal to 5% times 250,000 minus my taxes. My taxes are equal to 30% times the 250,000 minus my bonus. And I can solve this either way. I can solve for T and then back into what B is. I can solve for B and then figure out what T is. But really, I'm not interested in T for this specific problem. I'm interested in the bonus, in B. So that's what I'm going to solve for. So my bonus will equal 5% times 250,000 minus 30% times 250,000 minus B. So I've just substituted this amount in for T right up here. So let's see if we can put this together a little bit. So my bonus is going to be 5% times 250,000 minus, let's see, 30% of 250,000 is 75,000, and 30% times B would be 0.3B, but I've got two negative signs in there, so this is actually going to be 0.3B. So I distributed this negative 30% through. Well, now I can combine these terms, so 5% times 175,000 plus 0.3B, and now I can multiply the 0.5% through, so this becomes 8750 plus 0.015B. And now I can put the B's together. So I have B minus 0.015B equals 8750. You didn't think we could do anything fun like algebra in accounting, did ya? There you go. You can use algebra to do accounting. Pretty cool. Let's get the B out of there. So B times 1 minus 0.015 equals that 8750. So 0.985B equals 8750. So my bonus will be 8750 divided by 0.985, or $8,883. Now I'm not sure how that 5% divides up into Joshua and Emily's salaries. It doesn't say, it just says the two of them get 5%. But I could use this 8883 to figure out my taxes. I could put that back in for the bonus up there at the top, and then I could solve and figure out what my tax rate is. And now I've got both numbers that I need to do my financial accounting. Now we're not going to do the taxes, but we are going to take a look at the journal entry for percentage bonus, and it would be bonus or wages expense, $8,883, and then again I take up my federal taxes and all that other stuff, including FICA, and they would end up getting something like, what, $5,800 after we take out all of this other stuff, and this would be percentage bonus paid to nurses. Wow, lots involved with payroll, isn't there? I mean, between what we pay to the employees and what we withhold from them versus what we have to pay versus the absences we give them versus bonuses. Wow, there's just a lot going on, and all of it takes quite a bit of work. We could call payroll one of the full employment acts of the accounting profession. These payroll taxes certainly do help us all stay busy, because not only do they have to be calculated, they have to be checked, they have to be audited, and they have to be paid. So all of that has to happen. Now, we've spent a lot of time talking about determinable current liabilities, all the different liabilities that are pretty easy to calculate. We know when, we can figure out how much really simply, pretty straightforward. And even though we haven't done all of them, the other current liabilities all work about the same way, follow the same processes, the same basic calculations. It's just a matter of going through the steps. What we need to talk about, though, are the contingencies. They're a little bit different, and that's where we're headed next time. I'll see you then.